Hello everyone. This is the pre-market report video for today 8th Jan 2025 for the Indian stock market in terms of Nifty and Bank Nifty. As we all know, after 2 days of heavy selling, yesterday Nifty had a small relief mainly because of two stocks, one Reliance and second ICICI Bank. CLSA rating upgraded the oil sector company to high conviction outperform rating from earlier outperform rating. They stated their valuation is very attractive. So yesterday, Reliance Industries alone increased near 2% and it almost recovered its whole Monday loss. Then the other oil stock ONGC also increased near 4%, but because it had less weightage in the Nifty 50 index, it didn't contribute much. So oil and gas whole sector increased 1.6%. Then metal, energy and media were the other sectors which also increased over 1%. Only IT sector closed negative 0.68%. Then regarding ICICI Bank, lot of brokerages like Axis Securities increased its target price, and in addition they released bank's preview for the upcoming quarterly results. But the problem here is most of them said ICICI Bank's net profit only to increase around 5% yearly basis, but not sure why market took that as positive. Anyway, overall 64% of the listed stocks closed positive and 33% of the stocks were down. So generally, yesterday it was a good calm day. Institution wise, for the third day in a row, FI was net sellers. Yesterday the net sold for 1500 crore rupees, whereas equally on the balance, DA net bought for around 1600 crore rupees. Then about the participant wise open interest analysis, still both FII and proprietary traders maintaining their bearish stance. In the future index market, still FII maintains 80% of their open interest in the short side and proprietary traders maintains 55% as the short position. In the option market, FII 3.3% of their portfolio makes more money if market goes further down. Similarly, for proprietary traders, near 7% open interest makes more money if it goes down. And as usual, when there is a negative momentum, client or retail traders 12.4% their open interest makes more money if market goes up. So no change in their stance compared to Monday closing. But the interesting contracting information is, yesterday actually there was no new call option position change. Then on the put side, actually both proprietary traders and FII sold put options and almost retail traders bought all those put options. Hence, overall, both FII and proprietary traders reduced their bearish stance. I think it's just for eyewash, and their majority of their current open positions heavily skewed towards the negative stance. So those were the quick takeaway from yesterday's Indian market. Then after the Indian market close, lot happened. First, Ministry of Statistics released their present whole financial year GDP growth rate projection, which they are going to use it for FY 2026 Union Budget. If anyone fancy reading it, please have a go. I will attach the link in the pinned comment. The number came as just 6.4%, way lower than last year 8.2% GDP growth rate and marginally lower compared to previous projection 6.5% and also lower compared to RBI's 6.6%. So top line, this is the possible lowest GDP growth rate for India in the last 4 years. Hence, it's very much negative. However, the private consumption, major part of the GDP, 58%, expects to increase by 7.3% yearly basis, which will be almost double the times than the last year, which was only 4% increase in FY 2024 compared to FY 2023. That is very positive. But on the negative side, private investment expects to increase only by 6.4% in comparison to 9% a year ago. And then another setback, it's government spending, expecting it to be only 2.5% increase, whereas in FY 2024 it was increased by 4%. Sector wise, if required, please pause and have a look. Mining and manufacturing was the very worst performer compared to a year ago. On the other hand, defense and agriculture outpaced the last year growth. Other sectors more or less similar. Overall, this GDP data release, we can't say it's negative, rather it's very much mixed, and based on the respective sector, we can expect stock market to react for it. Then second info, I guess another positive news for oil stocks. December month India's fuel demand increased to the 7-month high value. However, if we compare 2023 December, it increased only by 2.1%. So again, we can expect oil stocks to be on focus today. Then third, we know on the first week of January, all the auto stocks increased crazy like M&M and Maruti Suzuki because of their December month sales data to the dealers. Now yesterday, FADA, Federation of Automobile Dealers Association, released their dealer sales to the customer. Apparently, unlike manufacturer to dealer, for the December month, dealer to customer dropped by 2%, which is not at all good. However, on the slight positive side, average dealer stock dropped to 55 to 60 days inventory from 65 to 68 days in November month. So today, we can expect all the auto sector stocks also will be on focus. Finally, already a known negative news from other rating agency. Yesterday, India rating also confirmed the same. In the next financial year, FY 2026, they expect Indian banks' profitability to moderate. As I said, I forgot the name of the agency. Last week we discussed this, so it's a known issue, but possibly today also it might influence the stock. Coming to US market, there was a surge in number of available job openings in US at November month, like above 8 million job opening against the expectation of 7.7 million job opening, which in turn increased the 10-year bond yield to near 4.7%, which was the first negative. Second, Bank of America downgraded Tesla stock and Nvidia crashed 6% after the Monday night new chip rally, all made the US market to snap its positive run and close negative. Dow Jones decreased 0.42%, S&P 500 was down by 1.1%, whereas Nasdaq crashed near 2%. On the more negative side, US VIX it increased by 11% to near 18. About oil, there was a major drop in US inventory which increased the oil price by above 1%. At the time of this video, WTI crude trading near $75 per barrel and Brent crude closed slightly above $77 per barrel. In case of Indian ADR, except ICICI Bank, all closed negative. However, if we calculate the arbitrage, then IT looks more of flat to positive, whereas banking stocks indicating negative opening of around 0.5% down. About GIFT Nifty, early morning it traded at 23,700. At present, the premium is around 60 points to spot Nifty, so kind of indicating gap down opening of 30 to 50 points. So as a summary, global momentum turned negative. In line with that, GIFT Nifty and Indian ADR is indicating possible mild negative opening. Moving on, as per stock open interest, ITC, JSW Energy, Nowcree, Delivery, TCS and HCL Tech got an increase in open interest along with a negative close indicates the short build-up. On the other hand, Oil India, Biocon, Ipeca Lab, Bandhan Bank, JK Cement and Max Health Insurance got an increase in open interest with a positive price close, which means these stocks got the long build-up. Regarding the things to look out, at 2:30 p.m. Germany's new factory order is due. Then in the aftermarket hours at 3:30 p.m. Europe's business climate index is scheduled to release. And for US, very important, Fed meeting minutes, ADP non-farm payroll data and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 60 points gap up and moved very close to 23,800. However, it then slipped and closed at just above 200x moving average 23,700. Thus on the daily chart, Nifty formed a small bullish candlestick pattern with a long upper shadow resembling an inside bar pattern. Then second, Nifty defended the previous day's low 23,552. So both were mild positive but not enough to consider as reversal. I mean, still Nifty trades in the lower Bollinger Band. In addition, it trades below 10, 20, 50 and 100x moving average. So all indicating it's not yet out of the woods. Hence in the near term, Nifty might trade within 23,500 to 24,000 range. If it managed to sustain about 23,700, the immediate resistance is at 23,900 to 24,000. However, if it falls below 23,700, then 23,500 is the key level to watch as it coincides with an upward sloping support trend line. In case of Bank Nifty, similar to Nifty, it also opened 140 points gap up and recouped some of its previous day's loss and closed above 50,200. Thus on the daily chart, here too Bank Nifty also formed an inside bar candlestick pattern. However, unlike Nifty, it remained below all key moving averages including the 200 exponential moving average 50,490, which signaling more negative trend. In addition, it traded near the lower end of the Bollinger Band with the RSI and MACD momentum indicators in negative territory. Hence, until Bank Nifty passes above 50,700, we can't say the trend was reversed. Regarding the weekly options data, the maximum call option open interest was at 24,500 strike, followed by 24,000 and 24,200 with maximum new call option writing at 24,000 strike and then 23,800 and 24,400. On the put side, the maximum open interest was at 23,000 strike, followed by 23,200 and 23,500 with maximum new put option writing at 23,200 strike and then 23,000 and 23,700. Thus, from options data, Nifty might face resistance at 23,800 to 24,000 level with support at 23,500. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.